Yeah, so it's interesting because we've seen rates at a historic all-time low. I mean, a couple years ago, they were 2%, 2.5%, 3. So now today's rate is 7 and an eighth, 7.125. So I know no one has a crystal ball, but there are indicators. We are in an election year. Inflation is improving, and I think they'll go down, but I don't think that they're going to go down to a point where we saw them a few years ago. I think that's going to
Mhm.
be several years. I think it may be
Right.
2026 or 2000 even 28 for us to see possibly in the fours again. I
Okay.
do think that they may go back down low sixes, high fives, which I think people it's palpable. 7
Hmm.
is tricky, but
Right.
I think what you have to understand is when you're communicating to your clients, you cannot focus on the rate. You just absolutely have to get their attention off that number because it's literally just a number. It does dictate their payment. And I always say that to my clients that you have to just pay attention to the payment because that's
Hmm.
what you're going to be paying every month. You're not paying 7%. You're paying this payment every single month. And that's really what matters. If they can afford that, if they're comfortable paying that, let them get them to focus on that because that's really the important part.
What you're saying? Don't marry the rate, marry the home. Is that what your quote is?
Exactly. Yeah, exactly.
Yeah. Well, it's I hate to age myself, but I have to. Since I've been in the business 51 years, I can tell you that before the rates hit those twos and threes, which was, when was that? From 19 to 22 ish, about
Mhm,
2019 to
mhm,
2022. Up until that
mhm.
point in time, Stephanie, the lowest rates I can remember were around 6%, and then the highest were around 20% during my
Right.
career. So when I came into the business at 18 years old and I'm in my dad's office, rates were around, I don't know, 6, 7%. And that was seeming really low. And it was the
Mhm.
lowest until this period between 19 and 22. So as
Right.
the consumer or the buyers are looking at rates right now at 6 and 7%, if you just kind of take out that one little period of time, it's still the lowest rates we've ever seen.
Exactly.
And so as consumers are sitting here on the fence going, well, I'm going to wait and see if they go lower, it may be a fool's game
Right.
because for two reasons. One is every time we think inflation's under control, some new report comes out that says
Exactly.
it's not, which is going to prevent rates from coming down. And on top of that,
Right.
will they, like you said, will they ever go to three or two again, or was that just a blip in time? So now let's talk about your sellers for a second, because this is interesting, and I know we're way off topic, but I think it's important, and I
It's
know you'll have a
okay.
good answer for us.
It's gotta be a funky day. Today's leap year. It's
That's
the
right.
29th of February.
That's
We
right. So we
gotta
can have
funk it
fun
up
on
a
this
little bit.
call, and like we can
Yeah,
throw each
yeah.
other off. So if I'm a seller and I'm saying, I can't sell my house, I want to sell my house, but I've got this 2 or 3% interest rate that I don't want to give up to because there may never be 2 or 3% interest rates ever again, right?
Right, right.
Why is that kind of silly in a way? I mean,
For them to
because
get stuck in on the house because, well, it's all just their needs. If they love the house, if they found the house that they want to marry and it's a forever home, then stop looking. But if they're still looking, if they're still on the platforms, then that tells you that you haven't married the house and you're still interested. So that interest should feed off of, "Let's go see something. Let's go see some. Let's just go
Mhm.
see if you liked anything." Then that's how you usually can get them to shift out of the mindset. That's what I do. Because they are stuck on the 2%. They are stuck on that low payment because their payments will
Yeah.
double essentially. But if you just have again, you have to get them out of the mindset of focusing on the rate.
Well, you know what I was thinking? It's almost like living in California. We admit we're the most expensive place in the world to live, and we could
Right.
move somewhere else and save money for sure on taxes and everything. And we can, but here's my thought on that. Like, yeah, I can do that, but I can always get money back, but I can't get time back. And that time
Mhm.
away from living in California would be a huge, huge penalty for any savings I
Right.
might get on taxes. So to
Right.
me, so for me, Stephanie, I'd rather pay the taxes and live in this beautiful weather in this beautiful California. I mean, California's cool. So so when I think about that, it's like similar to this interest rate thing. I'm going to live in this house because of the interest rate when I really need a bigger house or I need a house in a different location.
Mhm.
That just doesn't make sense to
Right,
me.
right, right.
Yeah. So people
Well,
are
and
going to
it's
have to get over
funny,
that.
it's sad to see too because people get, so caught up in the politics or the financials and they leave California. And you can't, it's often really hard to come back. Once you've left, the affordability option, it declines immensely. And
Yeah.
I have a lot of clients that left and moved to Texas and Nevada, and they're trying to come back. And now they're
They're priced
seeing the
out.
prices, they're priced out.
They're priced out.
So that should
And
be
that's
really
why
the
I always
moral
want
of the
people
call.
when they I want to get them into real estate as fast as I can so they can start building equity. And I never let them sell unless they buy something else.
100%. 100%. That's also something that's really interesting. My dad taught me that, and that was honed in on me at such a young age. I just remember that. Him saying, "You never sell real estate in California," because I grew up
Ever.
in San Diego. So, and I just remember him saying that, and I remember him going back to try to purchase our childhood home, and he was priced out of it. So we just completely moved areas, but I know it's getting completely off topic, but that was something that was just
Well, it's
ingrained
on
in me in
topic
such a
too.
young age.
It's really on topic because I had a friend and he was a big listing agent. And I used to practice the same thing as a listing agent. And if people would say to me, like, I'm thinking of selling my house, and I go, my first thing is why, and you shouldn't sell.
Mhm.
I always start there. And sometimes it's kind of like, why would you do that? You got a listing coming. But it's just that I
Right.
really worry about people, getting out of the market, like you say, not being able to get in because it's becomes unaffordable. All right,
Mhm.
let's go to buyers again, and let's talk about how important it is to pick the brain of your lender, dig into their expertise, and to really know the products in the marketplace, and to
Yeah.
really know financing, and not just turn it over to a lender. Why is it important for a realtor to be involved in the process?
Well, it's funny because I even remember, a transaction we just closed, and I called the lender, and I was representing the seller, and a buyer's agent was representing the buyers, and I called the lender immediately, as soon as we opened escrow, and he said, "You're, like, one of the only agents that ever has called me on the listing side." And I said,
Really?
"Well, that's interesting." And you either if you're not even being represented by this lender, you are. Everyone's in the same goal. So you're all a little team that you form. Your title rep, your escrow person, your lender, both the agents, and obviously the clients. So you all have to really become a team and figure out how to best move together to your goal. And I think that starts with building rapport and building relationships immediately. And if you can do it before escrow opens, obviously with your lender, if that's someone that you have a buyer, and obviously your title rep and your escrow person that you've worked with several times, then you will have a relationship with them. But understanding there's so many people, there's so many lenders that will say, yes, no problem. We can close in 20 days. Okay. The 20th day approaches. Here we are. If you've had no conversations with them at all, the entire escrow, you're in trouble. You don't know what's
Right.
going on. So, and for the buyer too. I mean, you can't step on their toes, but you have to understand because a lot of times the other agent doesn't understand. And they don't even understand the contracts or what they've signed, and they don't understand what their buyers are even getting financing. And so we had an issue with the debt to income. And she said, "Oh, I don't know, it's something DT," and I'm like, "DTI, it's debt to income." Their ratios were over the 45% threshold that
Oh, wow.
most banks will have. That's a real problem. You have to figure out where you can get either more income, and it's too late to pay down debt at this point because at that point when you're in escrow, you need every dollar that you can have, right? So
Mhm.
you can't scramble at the 11th hour. Know what's happening in your escrow. Know what's happening with your people that's on your team. Get a good team, and you'll have a great deal.
How much? I mean, let me ask you this. We talked about this before once. how hard do you push your clients? And do you stretch them to take as large a payment as they can to get the best house they can? Or does it vary based on maybe the client and who you're talking to?
Yeah. It's really case by case. There's certain clients. I have one now that's very risk adverse, and she's very, very conscious about her payments. They think that they can pay certain things, but then when it's in black and white, when they see it, they're like, "Oh, okay, that's a lot of money monthly. I don't know if I wanna do that." They can
Mhm,
afford it, but they don't want to. So in
mhm,
that situation, I probably would push to get the property that I know that they want.
mhm,
But if I see someone that's a first-time home buyer, I would never stretch them. It's just
mhm.
you have to really understand the cues and understand what they're saying to you and really listen. And oftentimes we people love to hear themselves talk and talk, 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 and agents are
Mhm.
talkers, but this is the moment where you just have to understand and really just shut up and listen.
Right. I agree with that. I agree with that a lot. So there's a lot of different products on the market. There's fixed
A
loans,
lot.
there's
Yes.
variable loans. You know, is there a one size fits all? Should everyone always get a fixed loan in your opinion?
I mean, that really depends on the client too and the property. If it's developer, I mean, they could do short-term loans, 3-year ARM, 5-year ARM, 7-year ARM, and they'll be out of the property. So something like that, it would behoove them to take that kind of product versus they would never take a 30-year loan because they're not going to be in the property for 30 years, right? So if it's really going to come down to what your needs are as a client.
So
But
that's a good
I
point. You're
mean,
probably not
adjustable
going to
are great.
live in the property 30 years, but then how many people even keep a loan for 30 years is the next question.
Exactly,
I mean, I'm
exactly.
thinking for myself, I mean, I'm not a person particularly that loves to pull money out of my property all the time, but when rates go down, I'll get a new loan, take advantage of the lower rate.
Mhm. Sure.
So I know it's interesting because my partner always recommends I take a variable loan, and I always evidently take a fixed loan just because I don't know, fixed just sounds so secure and good. But then I never keep it more than 5, 6, 7 years anyway. So I don't even know. I
Right.
think he's right, actually. I should probably be in these lower rates, and then because I'm going to do it
Yeah,
anyways.
right. Life
But product
happens and
knowledge
you
is
have to just be.
important, right? Because you need to
Mhm.
know, like especially when it comes to the variable loans. What are some
Right.
of the things to look out for in a variable loan or adjustable rate loan?
Um, Prepayment penalties, or if they have a balloon payment at the end of certain terms. Prepayment penalty means if you pay off the loan prior to the actual loan term, the life of the loan.
Mhm,
You wanna really steer clear of those. We don't really see those, as much, especially in our market, but that
mhm,
was more so before, subprime days.
mhm. Okay, so you had this thing you wanted to talk about, which I think is really important, which is called beyond market knowledge and being an advocate for your client. What were
Mhm.
you thinking when you brought that topic up?
So I think it's just I see a lot of people in our industry just kind of, and I don't wanna say anything negative because 'cause I'm not, because everybody works differently, and if it works for you, great, but it doesn't work for me. So this is just something personally that I have figured out is I know Alex said this, he said, "You have to find your superpower,"
Mhm,
and you really do. You have to figure out why you're doing this, and you have to really care. This is a huge deal for these clients that you're working with.
mhm,
They're probably buying the biggest asset in their entire life. And if you cannot be an advocate for them every step of the way, then, it's just you have to really wonder what you're doing this for. And a lot of people get into this industry for the money and the glamour. And oftentimes I'm eating, food in my car like a little trash panda. So it's not glamorous. You're in your car all the time and we're
yeah,
running around and it's a lot, but you can't get caught up in it all and you just have to almost act like it's your house that you're buying or selling. That's how I
yeah,
look at every single. I don't really ever call it a transaction because I'm not really a transactional person nor agent. So I think I'm not worried about moving on to the next. I'm very much in the present. I'm going to take care of you every step of the way. I'll be at every appointment, every inspection, everywhere your agent or everywhere your client is, your agent has to be,
Mhm.
in my
Mhm.
mind. A lot of people send assistants, and that's great. You have a big team. As long as the assistant can do exactly what you can provide, then it's fine. But
Mhm.
I'm myself, so I'm not on a team. I'm a solo agent, so I have to do it. But
Right.
and I'm a control freak, so you have to kind of have a little awareness about that too.
Well, I mean, if I'm hiring an agent, I mean, I'm just going to speak frankly. I want
Mhm.
that agent at the showing. I want that agent at the
Right.
appraisal. I want that agent, talking to the lender
Exactly.
because
Right.
that agent happens to know my property better than that assistant. And therefore, what am I getting? So I don't
Exactly.
think that I don't even think agents with big teams can really just separate themselves from their deals. I think, teams can
Right.
be supportive and helpful and help that agent be more productive and things. But if they're actually just doing the list it, turn it over to the team, list it, turn it over to the team, list it, turn it
Yeah.
over to the team kind of thing. I mean, I guess it works, but as a
Of
client,
course,
I
it
want that
works for a
personal
lot.
attention. Yeah.
Yeah, of course. I think the majority of at least my clients do. They see the value in it. So when I do go to list their property and the commission comes up, it's not a fight to, well, someone down the street came by and said that they would do it for 1%. I just look at them and I say, okay, well, you know me by now. You know that I'm not a discount broker and I'm not going to take this listing for 1%. And
Mhm.
the conversation is pretty short because I've already proven my value. I don't have to prove it in that moment. So if you prove your value along the way and not at the moment where it actually matters on paper, your arguments are a lot easier. And I say arguments loosely because it's not really an argument, but sometimes it gets a little heavy in there.
Well, there's a lot of
So,
misinformation, and there's like you said, a lot of wrong perceptions about things. All
right.
right.
Well, and there's a lot of agents that are discounting right now because they do volume and the market's tricky. The
Mhm.
market is tricky right now, but it's moving. It's exciting. There's a lot of good stuff happening.
Yeah. Well, let's go to this now. This is continuing along the lines of being an advocate. Let's say you're representing a buyer and you're in
Mhm.
multiple offers, and
Yeah.
you know that within those multiple offers, some of the buyers are cash buyers, and your buyer's getting a loan. Being an advocate means you have to be able to sell that offer that you have above all the other offers so that your client can
Mhm.
win that multiple listing situation.
Right.
How would you sell? This is tricky, everybody, so pay attention. How would you
Mhm.
sell a loan offer over a cash offer so that your client could actually win the multiple offer?
So, I know some lenders may not love what I'm about to say, so don't get mad at me. But this is kind of a back pocket thing strategy that I've used to win out, certain offers that weren't cash. And what you can do is get your lender to do a full DU desktop underwritten file. And obviously that's pending the appraisal, but you get them to do all of basically the legwork. They do all of the underwriting from the application to the deep dive of the financials. They actually fully approve your client as if it were cash. So when you are presenting that offer, you can say to the agent, hey, I know you have a cash offer or several other offers on the table, but I have a fully approved pending the appraisal file for my client, and they're willing to pay a little bit more because obviously cash is they're going to close quicker or whatever, but they may not want to pay a little bit more because they're cash. My client's okay paying a little bit higher of a price point because we know that it's financed,
Mhm.
and oftentimes you'll get it. And again, it goes back to also really building the rapport with the listing agent. If you're at the showings, talk to them. Really get to know them, get to know what will work. And so you can build this camaraderie to have a connection with them.
I've actually been in some situations in a managerial role where sellers have chosen to go with a financed offer over a cash offer because there's some security and comfort in knowing what stage the loan approval's in, and they see the buyer invested in the process, and they
Sure.
see, you know what I mean? That I think
Mhm.
that's a big piece because with cash buyers, it's not as, I don't know, you don't know whether or not they're going to pull their money out and put it in versus when
Right.
they're, you know what I mean? It's different.
Right.
So there is some
Right.
comfort and security in that.
Sure.
Yeah, absolutely. Um, what are, I mean, we talked about, talk a little deeper into the underwriting process and insights and strategies around that. Like, what are some of the things that probably most realtors don't know in the, and again, lenders, forgive us. We hate to do this to you, but if we're going to be a team, we got to work together.
Right. So you have them okay, so you have them give their application, you have them structure their deal of how they're going to get pre-approved. They usually do the first qualification, and that's just kind of looking over the tax forms or their bank statements and saying, "Oh, yeah, they can afford this payment because this is what's in their bank account, this is what's coming in monthly." If you have them move the needle a bit and have them actually pre-approve them, that's a completely different scenario because they're actually doing the deep dive into the financials. They could have $100,000 in their bank account transferred last week. Okay, that's going to be a huge red flag for a lender. Where did this $100,000 just come from? And it's from my uncle. My uncle gave it to me to help me as a down payment. Okay, that's wonderful. Thank you, uncle. But you need to have documentation to substantiate where that money came from and why you got it. And it's called a gift letter. So that's something that I think a lot of people may or may not know about. And it just kind of comes up and it can really throw you for a loop because the underwriters won't just say, "Great, thanks, uncle," and just move along. You have to understand where the money comes from, and it's really line itemed. They have to look through it with a fine tooth comb.
I love that. I love that. So tell us
Yeah.
the markets you work in, Stephanie. I know you're in the Malibu office, obviously. What other markets
Yeah.
do you work in?
So I work the West Side, and I also have several clients in Beverly Hills. So essentially, Beverly Hills to Malibu.
Okay,
But
great.
I'm not a volume agent, so wherever my clients need me, I will go.
Okay, I
I'm
love
not
that.
probably going to like Barstow or Rancho Cucamonga. That's a little bit of a trek, but I'd rather
Yeah,
refer that out. But I'm happy to go wherever my clients need me.
I love that. I love that. So, how do you see the market right now? Like, is it different in Beverly Hills than let's say Malibu, or is it somewhat similar, operating similarly, or
No, Malibu, as you know, it's kind of a completely different little animal. It's a very different market, but I think the market it's shifting. We're seeing a lot of movement right now. We're seeing a lot of active under contract, a lot that are going pending, some that have been sitting, some new listings coming on the market. It's really exciting. There's a lot
Hmm,
going on. The market's it's moving.
good? Are you seeing listing
Yeah.
inventory increase at all, or is it still
Yes.
staying
It's
low,
inching up. Yeah, it's inching up.
inching up?
It's pretty low. Yeah.
And with the buyers, are you seeing them becoming more confident, wanting to get in now, or still kind of on the fence? Where you're seeing them
Still on the fence.
still on
I
the
see
fence?
still a lot on the fence. Yeah, we're finally getting some over the hurdle, but I believe a lot of them are still a little adverse, and I think people are still thinking that the market's going to go lower, and I still think that people are waiting for the rates to go lower, but you're just waiting for prices to go up. So essentially, it's a wash. And that's what I try to explain to my clients because if rates dip down and prices go up, it you waited for nothing because it's just a wash. Just get in now. Just get in.
That's correct. And prices from everything I see in all the reports from Case Shiller to California Association of Realtors to,
Mhm.
even our own that we do at Douglas Elliman, we're seeing prices inching up. They're not going up at the
Mhm.
pace that they were, but they're still they're not even flat. They're actually still
No.
heading up. So buyers waiting around is probably really not the
Right.
best idea. And then if rates come down, I mean, holy mackerel, it's going to be like off to the races.
Mhm. Right.
So, our chief executive officer Scott Durkin's telling everybody, in his message that now's the time to buy if you can find the house, because if you wait until the rates come down, you're going to be in this, mass entry of buyers into the marketplace competing for the same property, and you're going to end up paying a lot more money. Do you sense that that's what are you advising your clients the same thing? And is that what you're sensing?
100%. 100%. Yes,
Excellent. Yeah,
absolutely.
absolutely. So if you can get in the market right now and buy something, and even if the rate's at 7%, you can still refinance later if they come down. And if not, I think
Exactly.
historically you're going to realize 7% is still a really good rate. And I think people
Right.
are just going to have to, get used to that and kind of change their perception around that. Um,
Exactly.
yeah. So what's your future and what's your vision, and where are you going with the rest of this year? And tell us how you're going to navigate and what you're going to do with your business.
Well, I have some really interesting clients that I'm working with that are spanning out and developing into new projects. So I'm really excited about that. And they've been kind of on the sidelines for a while, and I'm finally getting them in the position to they've witnessed the last, few years and everything, what's happened and all the information that I've provided. And they say, okay, well, I get it. And I should have bought 5 years ago when you told me to buy. And we don't want to wait another 5 years. So it's great. We're getting a lot of people to the table, so to speak. So it's good stuff. And I think the market's really going to be strong this year. I think it's going to be really strong. It's always historically with an election year, it'll be good. So I'm excited for this year.
Well, Stephanie, thank you so much for being on The Core Truth.
Thank
It's always
you.
wonderful to have you.
Thank you so much for having me, Peter.
Will you come back sometime?
No.
Please.
Next leap year. Next leap year, I will. Yeah, I
Pretty
promise you I
please.
will come back next leap year.
Well, thank you everybody for listening and being on this podcast. This is Peter Hernandez from The Core Truth. Have a great week, everyone.